Good evening, everyone. Welcome to Admiral Markets webinar. Today is 12th of February 2014. Today I will present you a pattern system. It's a little bit it's a little bit complicated than last one. As you know, with this series of price action trading, we go from most basic ones to more complicated ones, systems, and I will show you some new chart pattern, new candlestick formations which we haven't spoken of in those last couple of months, so you will see what I have prepared for you. Just prior to our start of the webinar, I will congratulate everyone who have taken nice trades today, especially those short trades on euro dollar. As you could have seen on the analysis, it was basically this price action on Forex Factory and on an Admiral Markets blog. We had a wedge, we had a nice trend line, and while we were below this level, it's 3,585. Some of the opinions also are, one of my trader colleagues is that euro will go, of course, to the downside, so we will see. It has the potential to still go down from that. So basically, guys, what I'm implying is you will see price action is not that hard. It's basically a very simple one if you follow the rules. And again, I need to stress out that basically when you trade price, what most important is the money management. Prior to the beginning of presentation, I will tell you about risks. So online educational materials are developed by Admiral Markets AS Estonia for a global audience. Therefore, please take into consideration that information in this session may not be suitable for everyone. To get a corresponding information, charting conditions, and any other detail, please visit www.admiralmarketsglobal.com. Select your country of residence and contact an appropriate entity. Risk disclosure, which explains that Forex is very risky business and explains all the risks associated to Forex market. You must be clear that Admiral Markets is not responsible for the losses directly or indirectly. Admiral Markets UK Ltd takes no responsibility for the information accuracy. The analysis represents the personal opinion of the author. It's me, and in no way it represents the actual suggestion for the trades. These are not AM UK's opinions, and the website in the video is not .co.uk website, globaluse.com website. Forex is a risky business, and this is a personal opinion, and this webinar is for informational and educational purposes only. So today, what are we gonna talk about? It's simple. What is price action? What do we use in price action trading? What are candlestick formations? And basically we will talk about pin bars, dojes, inside bars, outside bars. Also, in this series of webinars, we will go from most simplistic to more complicated strategies. Today, after pin bar, doje, inside and outside bar, I will present you a new pattern trading system. It's done on higher time frames, and it uses all of those which we will describe. And of course, after the webinar, I will give you a special surprise, but wait for the end of the webinar. So let's talk about price action. What is price action? Price action is a technical and chart pattern analysis which attempts to find order in the sometimes seemingly random movement of the price. Swings, which are basically highs and lows, tests of support resistance, consolidation, are some examples of price action. The candlesticks and price bar are important tools for analyzing price action since they help traders visualize price movement. Candlestick patterns such as harami, engulfing pattern, crosses, pin bars are all examples of visually interpreted price action. Price action is everything that a price does, and just like every other facet of analysis, it's purely subjective. So basically, price action usually uses naked charts. Very few indicators or no indicators at all. As I told you, I know many traders who traded pure price action without any indicators attached to it. My opinion is you cannot solely rely on candlestick formations. You need other tools to help you identify tops and bottoms or possible reversals. Price action. It's an old school way of trading which has its roots way before modern indicators have been implemented. An increase in price action is another way of saying that volatility has increased. Algorithmic trading is not applied to price action trading. Algorithmic trading is trading by indicators, and when you trade by indicators, you basically do not use price action pure. All of those ways of trading have their, how can I say best, have their flaws and advantages. I need to say that today, you know, we all use computers. We can have a good, nice strategy basically using few indicators, using price action, and all of those methodology when you combine those methodology, you can have a nice trading method. I personally have started with pure indicators systems when I started trading. Probably you all did that. We were all searching for some systems, methods, and so on. Then after some years, of course, I moved to pure price action. And then I was still, I can say, an experienced user, an experienced trader. But basically, I switched from algorithmic trading, of indicator trading, to price action trading. Then I saw the flaws on pure naked charts, on pure price action. And what I did, I combined all of best from indicators and price action into one method, which I call today Camarilla MACD. You all know that all of those analyses which I do for every single pair, for Euro, Cable, Aussie Yen, no matter what, I do with my methodology. It's called Camarilla MACD, and it combines basically it combines all the best from indicator algorithmic trading and price action. So pure price action still has, I can say, maybe it's a little bit better than pure algorithmic trading. It's just because when you see candles, when you see those support resistance levels which are basically marked by the wicks of the candles, you still don't need any other indicator to show you which is the support, which is the resistance. So basically, although algorithmic trading or indicator trading is very good, and you have many good systems which use strictly manual rules and only indicators, I still can say that price action is a little bit better because, you know, you probably saw my charts. You can draw wedges. You can see when the wedge will be broken. But also we can do trend lines as we did today. And one of those indicators which are helping me a lot is Camarilla. You saw the basically Camarilla level, trend line, wedge, and then at that level the price went down. So basically what I use is I combine both of two. But if you want to learn about price action, now is the way on this series to learn about it. Last week when we had a webinar last month, we were talking about chart patterns. We were talking about some basic candlestick patterns. Today we will do a little bit more advanced. Those are not basic. Pin bars, dojes, inside bars, outside bars are a little bit advanced. They are not complicated, but they need some additional knowledge. In price action trading, we trade trend line breakouts, support resistance levels, Fibonacci and support resistance confluence, breakouts, chart patterns, candlestick formations. All of those things we combine into price action trading, right? Now, what are candlestick formations? Traders usually trade reversal candlestick formations as they want to trade off the support or resistance. So when I started with naked trading, I also had my course which was called practical naked trading, or PNT. I had students who applied to that course, and basically the methodology was I was doing manually those red lines which you see. I also did that on practical naked charts, and I used candlestick formations to buy into support or to sell into resistance, and sometimes those continuation patterns which can be an entry for a trending price. Then when I made Camarilla, MACD practical naked trading has become the part of Camarilla trading. But still, that is not complicated, but it requires patience, it's a professional trading methodology. But before you would ever want to trade a professional methodology, you need to know about this. Pin bars, dojis, inside bars, outside bars, how they behave on the charts. And as I say, today I will present you a very good method with pin bars, dojis, inside, outside bars to trade effectively of the support and of the resistance. So, traders, we usually trade reversal candlestick formations as we want to trade off the support and resistance. When we see that the price has reached its maximum, would you take a long trade? So let's say, even though it may be valid, I can say, let's say that pound is at 64.80 and it drops, I don't know, 10 pips. So you see a potential trade maybe on 5-minute chart. But is that normal to trade a long trade at 65.70 if the price basically was going like this? So will you take another long position? Yeah, you can take, but when? Only when important resistance level is broken, retested, and then the price moves further on. Elsewhere, I would use a short trade here, put let's say a big stop loss, and go for a short trade. So basically, that is why we use reversal candlestick formations, because we want to sell into resistance. If we see that the price is close to resistance, and we see some, let's say, a doji or pin bar, and there is also we need other confirmation, I'll show you that later, we can trade off the level to a short trade. So basically, good traders all want to exploit those reversals. They want to trade off the support and off the resistance. The only exception is the rule that if you see a breakout of that resistance, then that breakout goes some number of pips and then the price pulls back. That is perfectly valid. But if the price has gone 150 pips and it didn't pull back, then what can you say? So it's the same also for long trades. If the price was going down, 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 it needs a pullback to effectively go short again. 40, 50 pullback usually is enough. But we still need to see some formation of the candlesticks which will signal a debt reversal, which will basically give us a confirmation of the trade. Yesterday I traded USD CAD. And you know my last trade about USD CAD after our last session recap. I was telling you that USD CAD will go down. After the webinar, it went up. Basically, my stop loss was missed by 2 pips, and subsequently, I was basically closed on break even because the price went in some profit and it again pulled back to break even. But yet again, I shorted it yesterday. I think it was 1 point. Let me remember you. It was basically after some, I will tell you, I was shorting it at 1.0, I think it was 1.010 or something like that. So basically, when I tried to short, the price was going down, 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 but it pulled back to this level, I saw that 15, 1.01, 15 was resistance, and then the price went 30 pips in my favor. Although I was stopped at break even, I saw a very good trade at this level. So what we need to know is, if you want to trade successfully price action and the pullbacks, you need to see that level has been reached. Then after that level has been reached, you want to see a pullback. Today euro fell to 3.660, and basically now we are having a sort of 35 pip pullback. So we will see. It still looks bearish to me. So basically you want to see a pullback to test another level, then find a reversal confirmation to go down. Or if you see that the price is going down, 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 down without any retrace, after it hits strong support, you want to see either divergence or a possible reversal trade, only with those candlestick patterns. So basically, candlesticks formations are a number of candlestick patterns that signify bulls and bear strength. When you see this candle, bullish Mariposa, usually that candle will retrace to 61.8, 78.6 or 88.6 and then go up again, because that is a signal for a possible long trade, but you don't enter there because it's too much of the price. You need to see a pullback, okay? Steve Nissen brought candlestick charting to Western audience. That is very true, because I personally have read all of Steve Nissen's material. I have used also his advices, how to trade candlesticks, how to chart candlestick patterns. That is, I had also had it somewhere recorded, but I think it's in archives. It's very hard to find today. Basically, it's very impossible to find it. It's a lot of gigabytes of material, and I just don't know where I put it. But basically, I have learned from Steve Nissen's books and video material. Candlesticks are pure price action and reflect the mind of traders. They reflect traders' decision. They reflect traders' opinions. So basically, looking at Japanese candlesticks, it's very, very good method to see whether the price will go bullish or reverse, or maybe it will show you just a momentum of the trend. So if you see this candle to the upside, you know that the momentum is very strong, of course. But would you like to trade a strong momentum or weakening momentum? For a pullback, we need a weakening momentum. So this candle, I usually mark tops and bottoms with Fibonacci, and I wait for a pullback to 61.8 to 88.6. And usually the price, if the candle is big, it will reverse to that level. Sometimes it can directly go up, but I always want to see a pullback. The formation of candlestick is always the same. It has been formed over the years. So when we use candlestick formation, we know what to look for. White is bullish candlestick, black is bearish candlestick, usually on the charts. This is a simple candlestick, and you see, this is the body of the candle. This is the body of the candle. Center section is the body is hollow white if the close is higher than the open, so we say that if the close is higher than the open, then the candle is bullish. Lower shadow, the lowest price, opening or closing price, whichever the less, and we see also opening or closing the price, whichever is greater, and the highest price. This we call upper shadows or lower shadows or wicks. So I personally want to call that wick. Also here it's a wick, and I always take that into account when I determine support and resistance levels. When I draw trend lines, of course, I always take those wicks into consideration. They are very important. Don't listen to traders who say that is not important. That is indeed very important, because it signals what it signals. It signals price action. This is not a price action. If you just look at a candle forget about this. What would you see? You would see a body of the candle, and if the body is big, we would call that Marubozu candle, right? But if you see this candle, forget about this now, and you see, let's say, this one, this, like this, how would you call it? You would call it a shooting star, right? So basically, these wicks are very, very important. And I know that some traders ignore it. They draw the trend lines like this, completely ignoring this. This is price action also. This is also price action. Because the action of the price was to go there and then down, or to go lower than up. So the price was acting. That is why we call it the price action. It wasn't stand still. If it stood still, the price would look like this. It will go up, down, and who cares about this? Well, guys, price action traders care about it, okay? So we want to see a complete candlestick formation. You will see later, when I present you that system, why it is important to see those wicks. It's not just see me, trade me. Those mark the price action. Long white candlestick shows strong buying pressure or a strong momentum. Long black candlestick shows strong selling pressure or strong momentum. So buying pressure, if it's a long candlestick to the upside, it's called Marubozu. If it goes to the downside, it's called black Marubozu, and it's bearish. New traders should concentrate on learning basic candlestick formation on higher time frames. If you are new traders, I advise you, of course, to use higher time frames, because on higher time frames you will see much less noise than on lower time frames. I just never met any of the traders who actually know how to trade 1 minute time frame when he starts to trade. Usually traders want to go with scalping. Yeah, it's okay. There are very good methods for scalping price action on 5 minute time frames, and some of them are very suitable for beginners. But many of beginner traders, even the most advanced ones, do not have the time to trade full time. What they do is they concentrate on 3 or 4 pairs, sometimes 1 or 2 pairs, and they go for 4-hour trading. What is 4-hour trading? 4-hour trading is considered intra-week trading. So if you take trades solely on 4-hour, you are an intra-week trader. You are not intraday trader. And because of that, you usually open your trades once or 2 times per week, and that's it. So I just want to say that if you want to trade with candlestick formations, price action, start of course with higher time frames. I suggest 4-hour time frame, and the strategy which I will present to you is based on 4-hour trading. So candlestick formations can be used for entry points, continuations, or reversals. Most of the time those are reversal signals, because in candlestick formations we have more reversal than continuation signals. Now let's talk about those candlestick formations which are basically all of those: pin bars, dojes, inside bars, outside bars. Those are used in the strategy which I'll explain, and we need to talk a little about it. For each of them we know the rules, how they are formed. What are inside bars, and what is an inside bar? The inside bar is popularly known as IB, and it's a candle formation that only requires 2 candles to qualify as a valid. This usually goes with short-term market sentiment looking to enter before a big move that may take the place in the market. So many traders use inside bars around important support and resistance levels. Inside bar is characterized by the inside candle's price action being completely covered from price action the day before. So when we see this picture, we know that this is an inside bar. So we see that this is the first bar, and inside bar is completely covered into the body of this candle, which we call it a mother candle. Outside bar is price action formation, which consists of two candles, and it differs from IB. The outside bar is usually referred to as OB. For an outside bar, the high and the low have to be higher and lower than the previous high and low, but the open and close could be close together. This is bearish outside bar, this is bullish outside bar. So pay attention to this. I will also later give you some time to print screen your screen, and you actually can see what those bars are. So this is an outside bar. We also have inside bar. Those are completely different things. You see the inside bar is like this, mother candle body inside of it, and this is bearish outside bar, because this body of a complete action of this candle this candle is contained within the action of this candle. So in this example, we see that the right candlestick is contained within the left candlestick. Outside bar means that the left candlestick is contained into the right candlestick. That is the most simple definition. So you can see this is bearish outside bar and this is bullish outside bar. Okay? It's different from this. So you need to learn about it. Doje. Doje represent indecision in the market. A doji is not as significant if the market is not clearly trending, as non-trending markets are inherently indicative of decision. What is a non-trending market? It's the market which goes sideways. Okay? If the doji forms in an uptrend or downtrend, this is normally seen as significant, as it is a signal that the buyers are losing conviction when formed in an uptrend, and a signal that sellers are losing conviction if seen in a downtrend. So you know, I usually call those patterns cross or stop candles, and if you see that those candlestick formations are close to support or resistance, we are prepared for a reversal. So now we have inside bar, right is contained into the left, outside bar, left is contained into the right, and you look basically the color of the candle to see whether it's bullish or bearish. This is bearish, this is bullish. Then we have dojis or stop candles. This is very, very strong. This is a stop candle. This is gravestone. This is dragonfly. This is neutral. And finally, we have a pin bar. Now, look at the difference between this and this. Pin bar has a small body. So the pin bar formation is a price action reversal pattern that shows that a certain level of price point in the market was rejected. The actual pin bar itself is a bar with a long upper or lower tail, wick, shadow, whatever you call it, and a much smaller body of the real body. So what is the body of the candle? This is the body. I've shown you that. And this is basically a pin bar. So we have two important wicks. This is bullish pin, this is bearish pin. Some traders also traded those pins exclusively. They didn't do anything than trading those pin bars. So basically, if you see this wick and small body, you know that it is a bullish, and in this example, it's a bearish pin bar. The open and the close of the pin bar are near one of the end. I didn't write it correctly. It's near one end of the bar, and the closer to the other end, it's the better. So if you see that this pin is very long, it's twice as long as the body, and we don't have any other wick in the other direction, we call it a perfect pin bar. We have also variants of that pin bars. It can contain some wicks also to the other part of the body, but those pin bars are perfect. If you see something like this, well, we can say it's a pin bar, but it's not as perfect. This is perfect pin bar. And you will see that occasionally on the charts. Those are usually the signal of reversal and also a false breakout. Usually when you see the level of support, then you see that the price is going down, down, down. Then it goes up, 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 up. And what it does, it closes there. So it's pin bar of the support, and it will usually signal a reversal of the price. Same goes with the downside pin bar. It goes from the resistance and then back up, basically closing it above. So you want to see a pin bars as close as to support as resistance as you possibly can. Now, you know, inside bar, outside bar, doji or stop candles, and pin bars. So, what would be the next one? Bollinger Bands. For this strategy, we will use all of this, inside, outside, dojis, but also Bollinger Bands. What are Bollinger Bands? You probably know what Bollinger Bands are. For me, Bollinger Bands, how I use it from time to time, they are dynamic levels of support and resistance. Usually the price will go from this point to the middle, then it may go down, 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 then up. There are various ways to trade Bollinger Bands. But how I do it, some traders, let's say, just for the sake of the example, some traders want to see the, Bollinger Bands converted like this. They are basically very close to each other. And then when price starts rising, Bollinger Bands starts diverting. And basically when they see this and the price goes this, that means there is a bullish action. So basically how I do it, I usually want to use, and I use Bollinger Bands as dynamic support and resistance levels. If the price goes there, and then breaks through it and closes below, that can be a signal to go for a short trade. Also, when the price goes down, 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 goes through the Bollinger Bands, but then up and closes above the lower part of the bands, then the price probably will go to the upside. That is one of the methods. Second of the methods is to use Bollinger Bands, wait for the first break, then wait for actual formation to kick in. And that is true with this strategy, which I will present you now. They use that kind of Bollinger Bands methodology. You want to see a breakout. You want to see a breakout of the Bollinger Band, and then you want to see basically this price formation. Inside bar, outside bar, doji, and pin bar. So only those. Only those. One additional indicator is put on the screen. It's stochastic, which only serves as overbought and oversold indicator in this example. We don't use any other indicators, and for entries we will use those formations. As I say, this is not as simple, and or this series of webinars we go from the most simple to advanced and a little bit complicated methods. So next time there will be a more complicated method on price action strategy 3. But with this kind of price action, you want just to exclusively trade inside bars, outside bars, pin bars, dojis, nothing else. Bollinger Bands serve as dynamic support resistance levels, and stochastics are there to give us only overbought and oversold zones, popularly called OBOS or OBOS, overbought, oversold. That is the acronym, OBOS, abbreviation. 4-hour time frame for this strategy. Rules for long entries. You need to see a break on lower Bollinger Bands and stochastics to be below or equal to 20. When those rules are met, we want to see either a doji, a pin bar, outside bar, and or inside bar. So that is why I was telling you this is important. It's not so simple. Not so simple if you don't have any experience. That's not so simple to spot on the chart. But basically, this is how it's done. Inside bar, outside bar, doji, pin bar. Entry is at the candle close. I will show you in the charts. Rules for short entries. We need to see a break of upper Bollinger Band and stochastic needs to be above or equal to 80. When those rules are met, we want to see either a doji, pin bar, OBIB. So if you want to trade off the resistance, you want to see, I will show you, it's more clear now. The first target is the middle Bollinger Band, and while final target is upper or lower Bollinger Band. Now guys, I probably know that you don't know much about this. It's maybe you know about it, but it's hard to spot it. And that is why I can prepare a special surprise for you. You just send me an email, of course. It's easier for me to do it like that than to let you search on the internet, because probably you won't find it correct indicators. I will give you indicators for all of this: inside bars, outside bars, dojis, and pin bars. Those are automated indicators. You just send me an email, as always, Tarantula FX. It's my goodwill to share it with you. They're all free, so I have the right to share it with you. They're not paid, they're not copyrighted, whatever. So I got it for free, so I'm willing to share it with you. My email is tarantulafx@gmail.com, and just send me a request for those indicators. So in this package, I will give you a full template for this strategy, included with all of those indicators: inside bar indicator, outside bar indicator, doji, and pin bar indicator. Now, the rules are this. Rules are this, and basically what you will trade is this. So look at this. I always want to show you the latest price action, or at least a price action which was happening in the last 6 months. So this is October price action. It doesn't matter. I just flipped the chart and I have seen very, very good price action with these indicators. So look at this. So those signals are perfect. You just need to know a little bit about this. Read through this. It will be easier for you. But all of those indicators will do it for you. You will see a below arrow. This is basically an inside bar, but also this is how we call it, a pin bar. You see the break of the Bollinger Bands to the downside, and then we see pin bar. We see that stochastic is below 80. At this point, we are taking a long entry. Look at this. We just ignore it until the next candle has penetrated through Bollinger Bands. Also in this point, you see this point, inside bar, but stochastics, that is why I say it can be traded like this sometimes, because usually it doesn't need to be. This is perfect. This is perfect showcase of the trade when stochastics are also. But even if it touches it, it would be very good. So inside bar, look at this price action. Now we have again a perfect spot to go long. This is again inside bar. Look at this candlestick. Look at this stochastic here, and look at the price action. Stochastic is not too aggressive, because stochastic will only give you overbought, oversold zone. 533 is okay for this time frame, because you don't enter by stochastic cross of the level. It just tells you that the price is in overbought or oversold zones. You can watch it yourself, so maybe you can see it by yourself, but usually I have traded few times, a couple of times with 533, 4 in 7.3, 4 in 3.3, 19.3, but basically on this time frame my testing showed that this stochastic works very, very good. You can test it, of course, with other settings, but originally this is it. Look at this. This is not a valid because it's blue. You want to see blue below the support, and you want to see red below the resistance, but not blue above. Effectively, this would be a signal for buying, right? But you don't buy it because it's in overbought territory and you need to short it now. Now, this is a good place to short it because you have basically an inside bar here. But what happened is you would be in a slight drawdown, but then you would be in profit there in this point. Now, the price has gone too much to the upside, and look at this. Inside bar, bearish, and you see the price was rejected. So what you want to see is, you want to see a break of Bollinger Bands in either, let's see, this is the break of Bollinger Bands and stochastics. In that point or at the point after, we see a candlestick formation. It needs to touch 80 or to be above 80. So in this point, it's a perfect trade. We see basically a pin bar. Look at this pin bar, two pin bars. Look at where the stochastic is. It was, the first rule has been met here. This candle has broken through Bollinger Bands, two pin bars, stochastics below 20, and it went to the upside. Same here, stochastics touching 20. We have inside bar bullish and the price is going to the upside. Inside bar stochastic above 80, the price is going down. Mind you that this is 4-hour chart. So guys, you need to be patient. When you trade 4-hour time frame, you always need to be patient because you won't have so much setups, but you need to pay attention after the 4-hour closes, okay? After the 4-hour close, you need to pay attention on those candlestick formations. The next example, GBP 4-hour time frame. Look at this, outside bar here, the break of the price. Same here. Look at this. Same here. The break of Bollinger Bands, stochastics basically were above 80 in this point, in this point, in this point. And you see how the price was rejected to the downside. Then all of these are very good examples. Again, outside bar, yellow is outside bar, and you see this. Look at this point. Look at this point, swing. This is called a perfect swing trade. You know how I got the nickname Tarantula? When I started trading, I will tell you, Claudio, your stop loss should be above the last high or below the last low. Usually that is around 50 pips. But if you had taken a trade somewhere around there, that stop is a little bit higher. But it should be above the last high if you go short, or in this example, it's very small stop loss. And I usually go with 5 to 10 pips above the high or 5 to 10 pips below the low. But usually it's the best for some 50 points of a stop loss. So when I started trading, I was in a room with other traders, and I basically was, when I started trading more actively, I started giving them swing trades. And basically those were my calls. Go short there, go long there. Go short there, go long there. And basically I was exploiting swings like this. And because of those swings, I got that nickname Tarantula as a spider. You know how spider makes webs. It goes it swings on the web like a spider, like a Spider-Man. It goes down, then it swings to the upside, and it swings to the downside, and again to the upside. So basically, at my start of my career, I really liked those swings. And that was much easier to trade when you traded. Basically, I had a daytime job there back in time, and I couldn't do trading so often. So I just wanted to see those swings. And basically, it was a time when we had, if you remember, the very big drop of euro. So all you needed to do is short euro, short euro. You want to short euro dollar, okay, short it there, then wait for a pullback, then short it again, short it again. Short it all the time, but those times are long behind us, and it won't happen anytime soon. I can guarantee that, because there is no shorting of euro dollar constantly or any other pair as if we had it some time ago, especially year 2007, 8, 9. Those are times which are long gone, and it's very hard to see those perfect swings like this. Look at this swing, look at this swing. But basically, this kind of strategy exploits the swing, but pure price action. This is outside bar, guys. This is inside bar. This is a pin bar. You want to exploit those price action patterns. And this is the core of price action. When traders started to trade, they didn't know a lot about stochastic, a lot about those bands or other things. They know what the inside bar is, outside bar, candlestick, hammer, bullish, bearish, pin bar. I know a strategy also which exclusively trades those pin bars. So you go short if you see a pin bar at the retracement. It's a very simple, but you know, I don't use it. My price action trading is a little bit different. But if you know 4 of these, outside bar, pin bar, Doje, Bollinger Bands, it should be enough to make money for you on 4-hour time frame. As I say, I will give you the indicators if you want it. I will send you a complete template with indicators. You just send me your email and you will have it. Of course, it's my free will and it's free for you, because you know all of these things we are doing now. We need to thank Admiral Markets for this, and I have the opportunity now to give you things for free. And as long as I'm here with you, I will be explaining all of these kinds of strategies, and I will try to give you indicators and templates for free. Now, the question is, does the system work? Arne, of my backtesting, it works. I have backtested it. I just flip the charts. But basically, it's this, you call it a system. It's a basic price action system. I'm showing you basically from basics to more advanced strategies. It doesn't work good in 1 hour time frame, Arne, because on 1 hour time frame, Bollinger Bands are too tight, and you will usually see a signal when the candle is very close to the middle or to the lower the Bollinger Bands. Only 4 hour time frame, my recommendation. You can test it in 1 hour time frame, but my recommendation is 4 hour time frame. Now, I haven't, I'm not the guy who invented, how we say it here, a warm water. This is price action. This is the core of price action, guys. The core of price action. This kind of a system. Yeah, on daily time frame, GS, it should work. JS, it should work also daily time frame. You can test it on daily, it should work on daily. But you need to know about money management, because if you trade daily, your stops would be higher, but also your profits would be higher. And you need the patience for daily time frame. It works on 4 hour, and I presume, because it works on 4 hour, I presume that it also works on daily time frame. But I don't recommend it on 1 hour time frame. As I said, I haven't invented a warm water. These price action formations are well known. Outside bars, pin bars, dojes, Bollinger Bands. I just want to help you to trade it. But next time we will do, of course, a little bit complicated system, which will require of you all of this knowledge and few additional things. And it will be more discretionary. It may look automated, but it is a sort of automated because you are basically looking just for this one. If you want to spot it, how can I say? If you want to spot it by your naked eye, it would be very hard. And that is why I will be giving you indicators. It seems, yeah, here. It seems that my chart is locked here, so I cannot go with those slides. But never mind. We can go through all material. Now the question is, could we draw down the support resistance lines for helping? Always. Arne is the thing with all price action strategies. Support and resistance lines are very good for helping you to trade. If the SR are also including this setup, would it provide extra confirmations concerning reversals? I can say yes and no, because you are actually trading a price action formation. You are going into those pin bars. So you are trading price action formation. So I can say it will help you, but you are not required to have it on your charts. You are not required to have it on your charts. It will indeed help you, but it is not required. It is not very, you don't need to have it. You can try, you can test it. I always say, test it prior to going live. You need to test it on demo platform. And prior to going live, test it. So it will provide you a good understanding of those patterns, a good indications of reversal. And you can use some other, now I cannot click the chart, I would show you, you can use trend lines just to help you identify a reversal. But you usually know that if you see a Bollinger Band down there and up there, those are also support and resistance levels. So charting additional trend lines and SR is not required. You can do it, but it's not required. This, what I showed you, is enough. Okay? Go and try it. Send me your email. I will send it to you during today or during next day. I will send it to your email. So the question, if SR are also included setup, will it provide extra confirmation? Yes or no, because you already have a Bollinger Bands, you have those price formations, so you don't need to do that. We will go through some more complicated methods, and it will require a few additional knowledge and additional discretionary methods. So just at the moment, at this time being, it's not required. It's not required of you. You are required just to know about candlestick patterns, about those things, Bollinger Bands, and when you notice it, go long or short. Now, if I didn't give you indicators, it would be much harder for you to spot inside bars, outside bars. Pin bars are easy to spot, dojes also, but inside bars and outside bars can be a little tricky. So that is why it's a little bit complicated from the last price action system, but it will give you a perfect knowledge of these 4 important patterns, and it will give you profits. You can do that on demo account, and then you will see how it goes live. If you want to trade, you first need to know basics, from basic to advanced. I cannot show you now the most complicated methods because you need to know a little bit about those less complicated methods. And we will go through all of price action trading. So, of course, enroll for those courses. Now I don't see any question. So I can say that we have, great material. T. as well as the Monday's recap. Unbelievably accurate USD CAD stop loss. Well, Lo, I hope that you wasn't stopped out. I was basically, it was, thank you for this, thank you for this comment. I will memorize it so you can see it. Great material, T, as well as the Monday's recap always. Well, I try to do for you the best setups as I can. Of course, next Monday we will we will do that again. And well, you know, I will always try to give you best stop loss and target price as I can. Thank you very much for comments. I like when you make some pips and make money out of it. At least if you don't trade those setups, I don't know, maybe you are afraid, or I don't know, maybe you don't have the time. At least I give you the bias for that. So if you use your own methodology or system, you know what you should look for. If you were looking for shorts at euro dollar CAD, dollar CAD, well, basically you got your shorts. The price fell 100 pips after it, right? Well, unfortunately, I got only 30 pips, but I cannot say it's bad. Well, you know that 30 pips is not bad, right? So, enroll, guys, for my screen is blocked now. Very useful stuff. Thank you very, very much. Thank you. Thank you also. Thank you very, very much. Daniela, great webinar. GS, Law. Well, thank you, thank you, thank you guys a lot. We will do that always, really. Very nice webinar. Your prediction, Euro Yen, went good as well. Yes, Euro Yen, it was really good. Well, wait for Monday. I will give you my predictions and analysis. And also, if you want, you know, guys, you know where to find the daily analysis. Go on Admiral Markets blog, go on Forex Factory Spiders Den. I always post my analysis back there. And it's daily analysis on Spiders Den, on Forex Factory, on Admiral Markets blog. It's basically every day. Let me show you. Let me show you. I will show you this where you can find it here. Here you can look through this. This is my blog here. This is me, a picture and analysis of all of those things. It's my blog, Tarantula Fix, Spiders Den, my personal thread where I also make conversation with other traders, and we post those setups. Very, very good traders here, and well, go for that. Sometimes I will give you other setups which are not directly connected to euro dollar, you know, dollar yen, other pairs, all 23 pairs. And thank you. Okay, and a few things more. If you want to analyze other pairs, tell me, write me an email, and I will try to do that on Monday. On Mondays, we have Euro, Cable, and Aussie each Monday, but we also have 2 additional pairs. So I will pick for a few additional pairs. It takes time for me to analyze. You know how you don't know how it's hard for me sometimes to do that. Not hard in that physical sense, in that you know, psychical sense. It's very hard because I can see the setup. I know that I want to tell you you should enter maybe now. And basically the setup is forming while I'm writing the webinar. And you saw it at the previous session recap what happened. It happened that I traded basically Cable with you together. It was a long trade at I thought it was 63 or I can remember 90. It was 60 something 90. And it went then and it jumped some 30, 40 pips to the upside, and it was a scalp trade. And I mentioned that in the slide, go for a scalp trade if it goes there. And it went there while I was talking to you, and then it happens. It just happens. The same was with dollar CAD. And sometimes, you know, I wish I could have more time to tell you, okay, go there, go. Now, don't take me wrong. My obligation is to tell you these are not direct advices, of course, because you know about those risks, rules, and other things. And that is why I always say, guys, take that trade, of course, with your risks. It's your risk whether you will trade or not. But I am there to post you setups which I think that are valid for you. I won't give you snake oil, right? I will always try to give you the best setups I can find on those charts particularly. So write me an email. You will get indicators template for this strategy. Practice the strategy, and of course, we will be very, very soon together, me and Chris, with you. And also on Monday, new session recap. Sign up, call your friends, tell them that you are basically a Forex trader so they can also learn about this beautiful job. Thank you very much for comments, for your support, and see you very, very soon. Many green pips. Cheers.